Okay, in this interview, we have none other than E.B. Tucker. E.B. Tucker, we have a lot of guests that come on and a lot of investors that invest in precious metals. But one of the interesting things about EB is he's actually on the board of directors of Metalla and an overall guy that's been around the industry for a long time. So we've had an interesting little while as the time of making this. The December contracts just closed today with COMEX, and the price has been down. People are saying everyone's running to the hills, and a lot of investors are deciding they're going to throw in the towel and go to Bitcoin. The media is saying Bitcoin's replacing gold and that the gold runs over. So it's an interesting time to have you on. So without further ado, everyone hit the like button on either side, send this out to more people, and welcome EB.
Thanks for having me. And like you mentioned with the media, I mean, my philosophy is I do whatever the media tells me to do, because if they say it, I know it's true.
Yeah, I know. You're really good at that. I don't know how it's made you so successful just by following what everyone tells you to do.
Yeah, exactly. The New York Times, that's the beacon of success in the capitalist system, But look, I mean, it is tough times here. I mean, I'm in the penalty box right now because I had an end of year gold forecast that after hitting 5 forecasts in a row, I finally missed one. And my response was, I mean, who knew that predicting the future could be so hard? I mean, I want to bat 1,000. I missed one and I'm in the penalty box, but that's all right, because I like being in the penalty box. It gives you time to center yourself and to take a look around you and see what's going on. And a lot of things have occurred to me that I want to share with you, because I was kind of going over a lot of this with an analyst of mine today on the phone. We saw a new high in gold in August, and then we've come back to a really strong kind of support level here. And like you say, the COMEX contract closed today, which obviously there's gaming in that market. I mean, you had people that got into that contract when gold was 2,000, maybe more, and then you close that contract closer to 1,800. I mean, in fact, today it ran below 1,800 briefly, in the futures market. And so when you look at that, you say, well, what's going on here? I mean, okay, so a lot of headlines said that central banks were sellers of gold for the first time in a long time. So I did a little work on this. One of the central bank sellers was Russia. So back in 2006, Russia had about 12 million ounces of gold. And in 2020, that number was over 120 million ounces. And then in Q2, they sold about 2 million ounces, roughly. And I'm doing the math based on the average price and the amount that they got. So they didn't say how many ounces they sold, but it's about 2 million ounces, maybe a touch more. And here's what's interesting. In my book, Why Gold, Why Now, I have a section about what happened to the physical and futures spread. If you remember, I think we talked about this, that there was a giant spread. I mean, like today, right now, the physical future difference is like -$2. It's usually like right at zero, and it's $1 either direction or something. So it doesn't really cost that much to like shuttle the gold across town to deliver it. I mean, it's not really exactly a high value task, right? But it went to like $80 in the coronavirus meltdown period, a few months ago, which was unprecedented. I mean, and in fact, that was like a really big deal in the gold market, because what it meant was that you had this huge amount of premium to pay to get your hands on real gold. It's a very strange time. And then it came back all the way down to zero, -2 actually. Well, that times up perfectly with the Russian sale. And when you think about it, if they had over 120 million ounces, they sold 2 million ounces. That's like an inconsequential amount of gold to sell. And so I was talking to my analyst today, who was wisely telling me, he goes, they probably got something for doing that, for liquefying the physical market. Now, of course, we're speculating here, but you just look at, like we were joking about these media headlines. You look at these media headlines, which say like central banks are no need for gold anymore, right? Biden's team is going to take us to higher altitude, and who needs that stupid, pet rock of gold anymore. Okay, but it's not really the case. I mean, you had turmoil in that market. I mean, I look back at 2016 was the first spike that I could see going back over a decade in that physical to COMEX premium. And then 17, you had another little bit bigger spike, like $15. Then in 18, you had a bigger spike. And then in 2020, you had the biggest spike. So what it tells me is that with the financialization of the markets, the playing with the gold market has become more intense. And it got out of control at $1,500 gold. And so we had to move up to this new level where the game playing began once again. And so the game playing is probably going to go on until we run into a problem, and then we're going to go up to another level. Does that make sense, what I'm saying to you? You know, and how long is that going to take? I don't know. I mean, I think Biden's going to be a weak dollar president. So a weak dollar for at least for the first half of his term is going to be a weak dollar president, and trades that do well during a weak dollar environment are going to thrive in that time. So how long is it going to take to run into physical to future, issues? I don't know, but I'm not going to sit out of that market and try to play that. I think what happens is I think you end up with much higher gold prices, and you were trying to get cute with pullbacks, and you miss the big run. I mean, this market, this gold sector is I don't want to say manipulated, because I think that's the wrong word, but it's gamed. It's a highly, highly lucrative market for certain institutions, because if you sell a contract at $1,900 gold and that contract expires at $1,800, that's gone. Whatever you sold that contract for, you put it in your pocket. So, I mean, imagine the amount of money today that goes clear on profit and loss statements of bullion desks. Imagine that. Every single contract that was sold when gold was higher, it's done. That's it. You don't have to deliver on any of those contracts above $1,800. That's significant. So I think people don't get into the weeds on that. Like, people on the message boards are always, EB says it's not manipulated. It's definitely manipulated. Listen, words matter, right? Words are important. Manipulated means it's like somebody back there setting the price. Forget about it. It doesn't really matter. It's like gold is real wealth. If there's going to be games played with settling the price at certain levels because there's profit in that, so be it. Use it to your advantage. Like if Mercedes-Benz all of a sudden was being slammed down at the end of the month to 20% below MSRP, I don't think you'd be complaining about it and sending message board posts about it, right? You just go out there and get yourself a car and be done with it and say, who's the sucker now? That's the way you do it. So think like that, and I think you'd be better off.
That's hilarious. So it's a conversation that, a lot. I interact on Twitter and I read my comments on YouTube, and I have a lot of interesting people on that talk about a lot of interesting things. So there's a lot of comments that people leave, and I've seen repeated ones where, first of all, before I ask you the question for you to respond, I did find it interesting looking at the COMEX graph of when the last deliveries were, which was in like July or the end of June. And that right after they settled, that was when the July run went up to 29. And I guess, right, it makes sense if you have a short-term hold on a market, you can't control it 12 months down the road, but you can control it in a week by week basis. If you sold a contract at 2 Gs, if you get the price down to 1,800 or you sold them at 19, it covers a spread of you losing money. Then the price can move, and that's what the graph said in July. So I don't know that much about all that, but I saw that and I thought it was interesting. But then my question is, people say, well, if there's really this type of woo-hooery going on in the market, and JP Morgan's been slapped with fines and all these things, people say, why should I even invest in this thing? I mean, if the price is never going to go up, and people make the memes and it's like a picture of Peter Schiff and he's like, gold's going to 10,000, and it's like all these different pictures and then him as a grandpa, and it's like 2021, gold's still at 1,800. And so there's people that are starting to get frustrated. I know obviously when FOMO sets in, then they just go spend their money and they'll be right back into it. But there's people that go, this is getting so frustrating that I don't even want to do it. What's your response to someone, especially as an insider that's really involved in the day-to-day financials of the business and you know what's happening and all these things? What do you say to someone that thinks like that and is looking at how being very pessimistic now because it went down and Bitcoin went up and energy's rallying right now? And how does it affect your expectations moving forward?
Well, the first thing I tell them is that Metallo royalty is up 1,000% since listing, and 4 years ago next week. So compounded average growth rate there is suitable. I don't know how you're going to multiply money any faster. I mean, people say 4 years is too long for 1,000%. They need that to happen, like by the spring or something, or maybe even faster. But Metallo is an example of a growing business in the gold sector. So gold during that period roughly went up about 50%. I mean, let's just to round numbers say.
Oh, wow. So it went up 50, but the stock went up 1,000. That's interesting.
Right. That's right. So, and just to give people the data, like 2016, roughly Thanksgiving to 1st of December, we did the RTO and listing, and you had time to buy the stock. It wasn't like it was just some, private placement. I mean, it was like you had like ample time to buy, days and days and days, weeks and weeks to buy the stock, on both sides of that event. So it was like very available to the public. In fact, I gave a talk about it at Sprott in summer of 16, and there's people that bought the stock then during that RTO period. They come up and thank me at conferences. And I mean, it's like, people had a chance. It's not some spin out of another company is my point. So then gold was about $1,200 back then, roughly. And it went to, call it 1,800 today. It's been higher. And Metallo came out at $1.20 Canadian and not including dividends. I mean, it closed today at 11.68. So, it's been 13.5 or something. And so anyway, that's the Canadian price, by the way. So the US the US is about 80 cents back then. The U.S. closed at 9.11 right now. So the dollar's actually softened a bit on the loonie. So I mean, if you did better than the U.S. Okay. So what do you say to people? Well, I've thought about this a lot because I mean, what good is it to be, your last words to the hospice care provider was, I was right about the financial system, and they're like, about what? Everybody's all chipped and they're, move your arm over here to pay for your burial. You know what I mean? It's like, you just lost, basically. You lost. So, but why is it a scenario where, so much is riding on gold going from 1,800 to 2,500? I mean, like, what have you done? You've bet your entire life savings on physical gold. It doesn't make any sense. So, because physical gold's not really an investment, it's an asset. It's like, it's something you turn into yen, turn into, whatever euros, whatever you want. And so in my book, I talk about how much gold should you own. And I don't give you a number because I'm not a financial advisor, but I start talking about like really realistic numbers, like 3%, like that would be like a starting point. I mean, if the asset managers of the world went to 2%, there's not enough gold on the whole planet to satisfy that demand. So I mean, like if 3%, 4%, 5%, that's kind of a lot, if you look at your total balance sheet, because you need other stuff. You need some real estate and you need this stuff. You're not speculating on everything. This is your fire insurance for your wealth. Okay. So, but Metallo is an example of a business, and the business is buying long-term royalty interest on gold mining assets, gold exploration assets, because a royalty is non-dilutable, which means that the mining company can foolishly raise, millions and millions of dollars issuing shares, all the time, and you don't care. And so the royalty is non-dilutable. So it's a free carried interest, which means 1% of this property's mineral resources that are produced goes on forever, regardless of what happens. Free carried interest means if the mining company has to dig another tunnel, they don't call the royalty company for more money. That's it. You just have a free carried interest on that property, right? And so I think where people miss that is that when gold goes up $100, the value of that 20 or 30 year stream of mining revenue, it increases dramatically. I mean, imagine buying rental house and expecting $1,000 a month in rent, and then a couple of years later you're actually getting 1,800. I mean, that's like whoa. Yeah, I mean, it's okay. So when you start looking at depression over the fact that gold won't go up and JP Morgan makes all the money and you don't, you got to ask yourself, maybe I should reassess kind of how I'm positioned here, because I mean, I'm like the gold guy and I'm not depressed today. I mean, look, I have derivative contracts in the silver market. They didn't do well this week. Okay. But, I can tell you that like they're doing all right. I mean, silver, it was like 1150 or something in March, and it's, I don't know, 23.25 today. It's it's okay, right? I mean, I have physical and royalty stocks. I don't really have any mining stocks. I'm not really very positive on mining stocks. It's a very difficult business. And they're doing quite well right now, actually. But I prefer royalties because there's...
Yeah, I think if you're going to buy miners, though, this is the time where it's still like everything's still pretty cheap.
Yeah, it is.
So, yeah, I mean, you're right on having all the... I mean, this is the time where if you're going to... did Doug Casey earlier 2 hours ago, and Doug said, it's a terrible business. And I said, well, would you agree that this is... out of probably any time, this is that little cyclical moment in time that comes around every 10 or 20 years where you can buy up a swath of even shitty stuff and it's going to go up because we're going to see equities move a lot. And he said, yeah, I think.
Yeah, well, I hope you asked him what are his primary holdings, royalty companies.
Right.
So, I mean, Doug's saying, you speculate here because when you speculate, you take a little bit of money and potentially turn it into a bigger amount of money. But the problem is people do that in reverse. They take all their money and bet it on something very risky and turn it into a little amount of money. And then they're upset and they would blame JP Morgan. It's not their fault. I mean, The fact of the matter is, like, when I bought silver derivatives in April and May, I bought them out over 2 years and, at strike prices from $20 all the way up to 45. So, I mean, like, I wasn't like, let me just take all my money and buy as many, of one contract as I can. I mean, it's just patently insane. So, you're an octopus in this money world. I mean, the first couple lines of my book is, like, this is a war against your wealth. Like it or not, you're wealthy. I mean, if you've got, $1,000 saved up, that's wealth. Try getting it back. If you lose it, I mean, you'll see the value, right? So you got to pay attention. And the way you do it is you don't do it with one tentacle. The octopus has many tentacles and he's going to lose a tentacle occasionally. And that's all right because you're moving forward in a way. We're in a gold bull market, period. I mean, today's downdraft doesn't change the fact that we're in I do not think the gold price can be sustained back where it was earlier this year. I do not think that the physical availability of gold can hold up at lower and lower prices. Games in the paper market are just games. And you see this all the time. Companies' options, now they have weekly options. You'll see a funky close on a stock that makes a lot of options. Now, I'm not alleging nefarious activity. Please understand that. This is just how markets work. This is what happened to Bunker Hunt. You remember, he's like, I'll just buy up all the world's silver. I have a friend who had dinner with him. I think I talked about this in my book. He had dinner with him, and Bunker, this was 3 days before he announced he was insolvent. And Bunker couldn't even talk. He had 4 desserts, and the lawyers did all the talking. This guy was the country manager for a Swiss bank who was trying to get a loan. Turns out he was days away from being declared insolvent. Remember, he tried to corner the world silver market.
Right.
Remember that?
So, yeah, I do. And I've thought in my head, like, I'm interviewing Rick Rule tomorrow, and I want to ask him, I say, you and Sprott and the types of people that you're managing money, why don't you guys just like go clean out the market? And that's a question I have. But then also with the Hunt brothers, I remember it. I think maybe it sounds like the smarter idea would be to stay away from leverage so you don't run into insolvency, or I'm not sure exactly how that.
Well, everybody's got a wiring. I mean, I have a very good friend in Switzerland that I was messaging with very early this morning, who's distraught over the situation, who had an incredible amount of futures exposure. That he took a severe beating, and I just said, look, man, like, it's really hard to speculate on this. It's really hard to be highly leveraged and to speculate. Is it impossible?
I have a lot of money in the ball game
Yeah.
here, but I don't have any leverage. Like, everything I own, I'm not, if it goes down, I don't have to cut my losses.
Sure. I mean, look, I happen to believe that leverage does this like a horse wears blinders so that it'll only see right in front of them. And I think leverage shrinks your field of view. You start making decisions. Hey, we had a big Metallic shareholder that lost his entire position in March because he was short Tesla in a margin account, and Tesla actually did all right, and he lost the whole position.
Oh my God.
And the
that
guy
just scares me.
He's this nicest guy, man. I mean, I just said, look, I mean, read the Jesse Livermore book, Reminiscence of a Stock Operator. I'm sure you've read this book, and guy makes and loses 3 fortunes in his lifetime.
Jeez.
It happens, but I personally don't work well with leverage.
Yeah.
And so for myself, when I have a derivatives trade, I do it in a way that allows me to carry that trade and not have sustained downside, like the compounds. That's just me. I mean, John, my old analyst, who I wrote about in the book, who's a market wizard. The leverage doesn't bother him at all. I mean, it's like the guy just sits there like he's watching a football game or something, and it's like, is no emotion.
Yeah, there's some
crazy.
So let's say though, I think we're in agreement. I mean, I'm not smart enough to trade with leverage, is probably why I don't do it. But I also the scary stories as well. But let's say you're looking at this, you're seeing the price go down. You say, EB, I thought you said silver is going to go to 40. What do I do? I'm thinking, should I just sell everything and get out of this? Are you optimistic about through the end of the year and moving forward? What's your views and the conversations you're having? Because I'm sure the same question that I've kind of asked you, you probably have tons of people you're talking to that are like, EB, I'm getting so scared.
Yeah. Including I'm on 2 boards where these types of outlooks really matter. I mean, with the royalty companies, we don't do any speculating. By the way, like, we don't say, oh, let's pay for this royalty like silver is going to go to 40. We pay for the royalty like silver is going to go to 23, which is where it is right now. I mean, that's how we do it. But it's still important to see what's going on, because sometimes companies have hedges and all these things. All this data matters. Okay, so let me just say that one of the things you and I have talked about, kind of philosophy and how important all these parts of life are. We talked about this before, and I tend to, because of years of practice, to do pretty well with resetting my thinking, which means, like, forget about what just happened. What's going to happen now? Because what just happened is done. That's like, when people say, well, I paid $8 for the stock, so I got to get it back to $8. I'm like, the market doesn't care that you paid $8. That's like ancient history. You got to worry about what's happening ahead. So if you got in over your head and you bought a bunch of silver exposure at 29, and you did it on a credit card, okay, it's time to stop and assess the situation. Okay, so like you got to fix whatever battle wounds you've taken. You got to repair his triage for that. Right? If you got leverage problems, you got to solve that problem right now, even if it means like getting out of things you don't want to get out of. You got to fix that. You got to get yourself back to neutral, and then you got to look ahead and you got to say what's going on here. What's ahead for me? I mean, the value of all the gold in the world is, 11.5 trillion or something at today's price. And do you think that the Joe Biden administration is going to be fiscally conservative or is going to be fiscally liberal? Well, considering that the Trump administration spent double the U.S. intake, I mean, the money into the Treasury I don't have all the final numbers yet for the year, but it's effectively, 3.5 trillion or something is like your revenue, and the actual spending for the year was closer to 7. So I mean, that was the guy that you're thinking like this is the more kind of like responsible, financially kind of sensible, business minded person. Okay, forget about all the things you read in the media or whatever. It was like we're going to see ramping up of all these 2 trillion in green energy, which is going to be great for Nova Royalty because it has some of the only royalties in the world on nickel development, assets, right? And you can't make EVs without a lot of nickel. Okay. Copper, same thing. You can't have all these, the whole green movement can't work without copper connecting it all together. Entitlements, infrastructure spending. You go on the Biden transition website. It's like, we're going to build back better, which is a great slogan that looks like some like PsyOps people came up with, in a research facility, right? Mind control. But what that means is that it's going to cost a lot of money. Well, where are you going to get the money? I mean, where's it going to come from? Is it going to come from taxes? Is everybody going to speculate and make money? All these Robin Hooders, right? Like these people are like all for, the administration that's like, we're going to raise capital gains tax to the income level. But I'm like, well, you just told me you wanted to become a millionaire trading your Robinhood account. So you realize that that's considered rich, and your tax, well, no, not me. I wanted to lower the tax rate once I achieve stardom, in the Reddit stock trading forums and stuff, right? So okay, so not you, but everybody else you want to pay. I mean, what are we going to do? Is everybody going to make a lot of money and pay a lot of capital gains tax at higher levels? I mean, is everybody going to? You see, how's this going to all work? And we're going to have big inflation because they raised the minimum. Like in Florida, they raised the minimum wage. It was on the ballot. It passed. It's going up. And it's like somebody asked me, what do I think about that? And I said, I think it's great because people are going to need it because basically it's going to cost a lot more money to live. So, I mean, like a couple of years from now, you're going to be like, $20 an hour is not enough to get by. I got to have more, Oh, yeah, I bet you do, because now the cost of the bus ride is, I mean, you have a totally green energy bus. I mean, it's really freaking expensive, who's going to pay for that? I mean, you see how this goes? It's down. It's the stream, it's the flow of things. Because what happens is, this is why people never end up making a fortune and achieving independence. They can't get out of their own way. So what they do is they look out and they look at how they want things to be, instead of standing there and saying, let's see how things are. Where's the current going? So we're people in a stream, right? We're flowing in a stream. And we're grabbing on to all the mangroves on the side of it and saying, no, I'm not going to let go to how it's supposed to be. Just let go and go with the stream and stop having an opinion about it. And when you do that, you'll say, what I want to happen is a preference. Okay. Like I get it. It's a preference. When you vote, you exercise your preference. But when you disrupt your Thanksgiving celebration by arguing with someone about your preferences, now you've turned those into demands. And when you do that, you cannot see what's going on. You cannot see what's happening. Does this make sense?
Yeah, so it makes total sense.
So you've got to do this, because otherwise you're so fixated on JP Morgan or something that you can't, you can't see anything else. And that's why you end up in your later years as like the smartest guy that's just totally been out of shape about some little thing that, needs somebody to pick him up to drive him to the Rotary Club to give a talk about the corrupt money system because he has no money for a car. I mean, it's like, it just doesn't make any sense. It doesn't make any sense whatsoever. And so now's a good time to do this, because if you do this, you'll say, what's the flow look like right now? Where's this thing flowing? The 10-year treasury is 80 basis points. The federal deficit is growing at a warp speed. The minimum wage is going up. The dollar's going down. All the commodity charts look great. Gold ran before soybeans, sugar, copper, nickel. It's all of them are going up. Look, you could blindfold yourself and pick one, and you would have made money. They're all going up. Gold just ran up, in advance and settled down now, and now you're looking for a window to jump out of. I mean, it doesn't make any sense. Like, there's no reason for that. Maybe you got to reassess your plan, because this plan is flawed.
Yeah, that's really good. That's why I was excited to have you on right now. And, really with this channel, like I told you all about my other brand and businesses and everything like that. I really started this for me to learn as an investor, and I think to help more people that, there's a lot of investors that are, maybe they didn't do it last round, or they didn't do it well last round, and what's going on. And that's why I phrase these questions. So this is somebody leaves and it's really valuable. And for me, I've learned a lot. I had never invested $1 in anything. I built my business, done well, and I had 7 figures sitting in a checking account. And I started buying physical gold at 1,500, started buying silver at 17, 18. And I put a lot of it in there. And then I realized is mining stocks, if you do it without leverage, buy the right stuff, and all those types of details, could present a great opportunity at this moment of time. It's been a crap business for 10 years. They're undervalued. They're heading into a lot higher prices over the next couple years. And I'm like, man, I might be able to, get a serious bang for my buck in that. And so my personality too, and having, a decent amount of relative capital, I just kind of put it all in, or not all of it in, but I put a lot in. I seized the moment, and I've handled it really well, because right away the March crash happened, and David Morgan helped me kind of get some emotional maturity around the market. And looking at it now, I'm realizing, look, there's short-term hiccups. What's really important is to stop making demands to the market, and to let go and go with the flow of this monetary system, which is obviously over the next 2 years going to push gold and silver higher. And so letting go like that, I feel like, is going to make me a more successful investor. Whereas if I didn't have this channel and I wasn't able to learn from people like you guys, I might have done that, got drowned for a couple weeks, and I was like, I should just get out so I don't lose any money, and I won't do anything, and I'll keep my money in my checking account type of thing. And I know that controlling my emotions, as you said, going with the flow, not making demands, and having a business so I have cash flow coming in so I don't need the money tomorrow. I know that 2 years down the road, this is going to be probably the most important thing that's going to create my success in the mining aspect, in the mining investors, and probably carry into other areas of my life. Do you think that as someone like me, that I kind of look at you like a mentor, do you think that's like an accurate, do you think I'm on the right track there with that type of thinking?
Yeah, just remember, anytime you get disturbed about the money, then it probably means that the trade is too big, or you're too fixated on it. I mean, I've got a friend who, I hate to say, he'll probably watch this because he watches all my interviews, but he's got positions in crypto, and his crypto's been up like 25% a day for 3 days in a row. And he's like, called me, he's like, I can't breathe, and what do I do? And I'm like, you don't do anything. I mean, you just held the thing for 3 years through the bottom of a washout period. You don't do anything. He has too much of it. That's the problem, is that he's like, he can't even think straight, and so yeah, if you're really upset and you can't sleep, or you can't breathe, or you can't eat or something, the trade's probably too big. That's the deal, and so it's a good indicator for yourself where you're like, okay, well, if I'm upset, it's probably something wrong with me, not the market. It's not the market's fault. mining stocks are cyclical. They're cyclical stocks, right? Like, you got to understand the difference between cyclical and secular. So, a cyclical bull market, you get a huge run, and then you get a devastating trough, and then you get a huge run, and then you get a devastating trough. And so you're like, why won't this thing go up? Well, it's because it's cyclical. It's not secular. It's different. And so if you're going to play cyclical markets, then you got to be aware, and you can't be running full tilt, on these things and just being like, I'm going to just stay up all night worried about it. That's not the way to do it.
Yeah, I haven't been staying up all night worrying, and I've got a great business and cash flow, but I definitely went a little too long. That's okay. Sure.
That's okay. Everybody's done it. Look, everybody has anybody that tells you they have not made mistakes is just lying to you, or they're about to make mistakes. Okay. That's like, it's like when you sign a contract, if you're really confident, that's a sign that you're probably going to get steamrolled. The reason why you have reservation is because you have experience. Look, I remember 2015, Christmas time. I remember calling Brett, the CEO of Metalla, who was my former business partner, and I said, "Look, man, I got a couple of these stocks in a trading account. I can't take it anymore. I've watched these things go down for like 3 years. I can't do it anymore, and I got to take some of this money out of here because it's down 90%." And then what happened? A month later, they kicked off in a run and they went up 1,000%. I'm making up the numbers, but you remember this. You look at the chart, and then I'm like, well, I can't buy it now because whatever. And it's inconsequential because we're doing the Metalla stuff and whatever. But my point is that everybody that's got experience has encountered these emotions and situations and feelings during their time. Nobody comes out of the chute knowing all this stuff. So on your journey, your goal is to not get wiped out. That's the goal. It's not perfection. It's to not get steamrolled and lose everything. You got to write more books, man. And you don't even want to write them. You got to write it. You're forced. So the goal, for investors out there that are on this journey, it's important to remember that it's not about perfection. Look, some of the best hedge funds in the world have success ratios that are just over half. And that's because they manage their risk very, very well. They're not going for 100% success. They don't need that. That means they're not taking enough chances. But they're managing the downside. And we do this in the royalty business as well, right? It's we manage the size of the deals that we go after. We manage the geographic diversification of the deals. We're incredibly disciplined on price because we don't want to have a write-down. You know what that means? If we buy an asset if we pay too much for it. One of our competitors this week paid about 40% more. I'm not going to say the amount because I don't want to be accused of slander, but they paid about 40% more than we bid for some assets. And the reason why we bid 40% less was because we felt like that's what they were worth. So if you get into a situation like that, and then down the road, it turns out they're worth a little less, you have to have a write-down. So in your financials, you have to say, we paid X, and actually we found out a year later it's worth X minus 20%. So sorry, that's a problem. And shareholders pay for that later. So all the excitement of that initial release is massively diminished by the fact that you say, it turns out this Kia wasn't really worth $150,000. So we made an error here, our fault with your money. So this, my reason why I'm giving that example is because this is at the personal level, it's at the company level, it's at the board level. It's now's the time to learn the lesson, because the faster you can learn it, the more fun you're going to have as you go through your path.
Yeah. I definitely went all in, but I bought at lows and we're at the bottom of the cycle, and I know great things will come out of it. But it's definitely been a spiritual initiation in some ways. I found, getting involved in a cyclical investment, because it brings up all the same personal growth things, which is ironic. It's a cool way to continue to grow as a soul and as a person and have that personal growth. So,
and this is your relationship with money. That's what we're kind of talking about, right? And you think about it, my relationship with my money is if you had the same relationship with a significant other, they would call you a codependent or something, and they would have a special class for you to go to learn about that. So it's a lot of times we have a disturbing, controlling, fear-based relationship with money. Why is that? That's the question for people to ask. We're not going to answer it for you. That's the question for you to ask yourself. If I had this relationship I have with money with my spouse, the spouse would probably strike me and then leave. So think about life in those terms. What we're going for is the secret, like to having, as to having a good long-term relationship is not restraining that person that you're with. What you say to that person is, look, I know you pretty well. I can't know all of you because it's impossible. And I want to be with you, but I don't want to hold you down. Ultimately, that's, because you're a creature with thoughts and ideas and desires, and you're in a stream of life too, which overlaps my stream of life 75%, but not 100, right?
Right.
So this is the market. So this is what you say to the market. Is that I like to flow down to the promised land of higher gold prices, but you made a detour. So I'm not going to demand that you go this way or go over here. So anyway, think about that, because that's heavy, but that's what's going on here, and you can grow through this.
Yeah, it's true. I know I'm more in the land of higher silver prices than higher gold prices, and I know it's coming.
You'll get it.
And I know I'm going to get it, and I didn't buy any leverage or anything. So
can you hold on is the question. Yes, I know you can, but the question is, can you, because look, triple top is what's coming. 50 in 1980, 50 in 2011. Triple top is what's coming. That's what's coming. Well, when is it coming? Well, let me get the magic 8-ball and give you a specific date, or look at the stars tonight and I'll tell you. But who cares when it's coming? It's only coming once. It's not blowing the triple top and making a run and then coming back to get you.
So when you say triple top, are you saying it's going to stop at 50 and then crash again and we're done? Oh, you're saying it'll hit 50 and break it.
Yeah.
Got it.
Yeah, I think so. And
I'm in that camp. I'm in that camp too.
I think it'll test it. Okay, so you'll that's a significant multi-decade breakthrough on the chart. So you'll come back and test that, and then you'll run again.
Got it. Yeah, I just wanted to make sure I understood that.
Yeah.
So let me ask you then, kind of in conclusion, I know you got to run. So I think this will be I've been trying to frame my interviews and also just be honest with, I'm talking to so many experts and just say, I put a lot of money in, and it's been a little up and down with the emotions of it. I'm new to this. Tell me what you think. And I think it's made them valuable. And as we were saying, you just got to hold on. And my feeling is one of the most important things to survive this new world, and this new world order is to, more importantly than 1 ounce of gold or 1 ounce of silver or 1 Bitcoin or 1 crypto this, I think the most important thing is to have a business. And it's allowed me to be able to probably take a lot higher stomach, more risk, and put more onto the table in the early stages when prices were cheap, because I had cash flow. And so I think number one, everyone to consider is a business, especially a business that is location independent for optionality, but also it's locked down and government proof, because we've known that if you have a store, if you have brick and mortar or an office, you can get shut down by the government. It's also good for a new political climate where you get fired for what you think. And it gives you, leverage for the most important wealth creation vehicle, which I would argue is a business more than anything else. So number one, a business. Number two, get some you could get some metals. Number three, you could get some miners, and more specifically royalties and Metalla. What else do you think, in conclusion, in these last couple of minutes, what do you think to survive these really weird, bizarre times in this new world we're going into? Is there anything else that you think I missed that's important for someone listening that says, look, I'm not as rich as you, EB, and I don't know as much as you, EB, and I understand what you're saying, but tell me, give me some last couple minutes of mentorship on some things that, might be useful.
All right. So in my book, Why Gold, Why Now, we write about, in the beginning, there's kind of this, what they call the hero's journey, which is like, why should you read the book? It's kind of qualifying me by giving you kind of a 15-year stretch of time of all these ups and downs that happened to me. The reason why I do that is because I didn't just, my dad has a furniture store, right? In a small town. I mean, it's done okay with it. But what I'm saying is that it wasn't like my dad ran a hedge fund and it was like, oh, just come over here and work. I mean, it was like, I was totally unemployed, and started writing a blog, on like a cheap Acer laptop. And I remember getting like $300 a month. I mean, I was collecting unemployment in 2008, it was bad. And my friends were like, write a blog about what you think you should do with your retirement savings. That was how I started. So I had, I tell all about this in the book. I don't know. I'd been saving in my 20s buying stocks. It wasn't like I had zero money. I didn't have any student loan debt. And I had some advantages, but it wasn't like I had a 7-figure chunk of cash to work with. It was scary. And, I sold the retirement account assets in a timely place, some of them, and sold the rest of them in 2009, and then bought rental houses and fixed them up and did all this stuff. And okay, so why is this important? Well, because I described to you what I was thinking during all this time. And I went to a friend and who told me, I don't like the real estate business. And he's like, you got these houses now, stop monkeying around with them and, do what you like, which is writing the blog and investing and learning. And so that's what I did. And that's how I met Brett. Magically, I was doing what I love to do. So my advice to people when it comes to like this business stuff is primarily don't worry about avoiding government lockdowns and all this stuff. The primary concern is to do something that you would do if you had terminal cancer and you had a year to go, but you had to do something. If I had 30 minutes to live, I would sit in front of the Bloomberg, because I love stocks and I love markets and I love learning. That's what I love to do. Okay. So like, that's the baseline for somebody with a business. What do you want to do? If you like working with your hands, if you like communicating, if you like writing, if you like whatever, that's the primary concern. Because if you stick with that, then you the stress level is lower because you're doing something you enjoy. And then as you do more of that, maybe you can't do it full time yet, but as you do more of that, the opportunities start coming in to your life, and you'll be able to figure it out. Okay. If it's part-time or if it's full-time or whatever, that's the way to do it. Don't be like, I heard people that sell Aflac make a lot of money. Let me go do that because that'll make a lot of money. That's not going to work for you. Okay. So with your vocation, that's the way to get in. Because I'm not young anymore, right? I know I have, great boyish looks, but I'm not young. Okay. I'm into the age of life where people expect you to have some things figured out, and so people need to understand that this has been a 20-year journey. This hasn't been like, in January, I decided to start doing this. Okay. So there was some really difficult years. It was not glamorous. I had an F-150 and was going on dates, with like construction debris in the back from my rental houses and, valet parking the F-150 with all that trash in it. I'm not kidding. And I had a good time with it. So, enjoy the ride. Okay. It's not like rich is your definition. My definition of rich was intellectual freedom. So how do I get intellectual freedom? First, I need financial freedom. Financial freedom is not having a Gulfstream jet. Financial freedom is being able to sustain yourself without going into a cube every day. So for me, I was willing to bring down my living standard and drive an F-150 instead of driving an Audi or something, right? I mean, I bought the truck for like $1,800, man, and I was like, no payment. so I'm like, that's one more step in the direction of intellectual freedom. Now, what did I do with the intellectual freedom? Like, fast forward, I turned it into like a fortune that I can't spend. So it gets progressively more inertia as you go along, but you've got to put the building blocks in place. You can't just skip to the end. You got to build this thing. All right. So with the markets, well, when you look at passive investments, the royalty business is the most special business I know of in the whole world. I don't know of any business, I tell this in my book, that's more lucrative than the royalty business. You can do more with less people than any of the tech companies, any major. I mean, the next best thing is like collecting taxes. That's like the only business I think that competes with the royalty business. So as we wrap up, Metallo Royalty, look at the insider transactions. I've bought stock since the beginning. I've not sold one share to date. I mean, eventually, obviously, there will be a time where I'll have to sell some stock because I don't have like a day job. So, I mean, let's be realistic. I can't buy stock weekly for 10 years or something. I mean, eventually I need some money. But I haven't sold any stock to date, and I've bought a lot of stock, and I'm enthusiastic about the business. I'm enthusiastic about the management. I'm on the board, so I have a lot of say in who the management is, and I have a lot of say in what they do with their time and resources. And if I wasn't pleased with it, I would change it. Let me just say that. Nova Royalty. Nova Royalty is copper and nickel. That's the fundamental building blocks of the green energy movement. Its royalties are the same. They're just on copper and nickel assets because that's different from gold and silver. Metallo's gold and silver, Nova's copper and nickel. The ticker symbol for Nova is NOVR in Canada. It'll have a US OTC listing shortly. We've applied for it. It doesn't seem to be any problem. It just takes time. So watch out for that. If you want to connect with me on LinkedIn, I'll put out the press release when we get the OTC listing. You can buy it through Fidelity International right now, which is something anybody at Fidelity can have. You get Interactive Brokers. We'll give you access to the Canadian exchange. It trades a lot of stock. I mean, today it traded $500,000 Canadian worth of stock. It's plenty. I mean, you can buy some stock in Nova. Metallo traded much, much more. But I would look at these companies when it comes to physical. Read my book, Why Gold, Why Now. Skip to the chapter about how much gold to own. And I give you a little calculation. Maybe try that because you might be looking at bigger numbers than exist. But I know we have to wrap up because I'm speaking to someone in Australia in just a minute. And what I like to do, though, is I like coming on because we talk about more than just materialistic, gains, which are only part of a balanced life. You need money money is like a vitamin. I mean, you need money. Let's not kid ourselves. You can't, it's not very pleasant to sleep outdoors and eat out of cans. And I mean, it's like we need, we got to get rid of some of the hassle factor of life. Okay. So it's necessary to try to advance and to go this way, but we're not gripping on to some specific outcome that if we don't get that, we're going to have a temper tantrum. That's the difference. And you see that, and that's been the secret along my path because not everything has been great. And when something happens that I'm not happy with, I take an assessment and let it go as fast as I can. Sometimes it's 10 minutes, sometimes it's 10 hours, but I don't want to hold on to my demands because it keeps me from experiencing the next part of the stream of life. And so when we come back, you and I can talk about what's happened since this interview, and people hopefully will follow us like that and take a journey with us.
Yeah, next time I'd love to dive into that more. I think it's super helpful. And next time you see me, I'm going to be floating a weight list down the river of silver. And
love it.
So I'll let you get going, though. I know you got to head
awesome.
out. Cool.
Okay, talk to you soon.